I have a question for you. Have you ever heard the phrase, you can't go broke taking profits? Well, in today's video, I'm going to show you why that statement isn't always necessarily true. Hey guys, welcome back to another weekend review video. My name is Akil Stokes. I'm the head Forex trading coach over at tradeempowered.com, and I appreciate you joining me. If you guys are new, this is a video I release each and every Thursday, providing you with a little insight of what's been going on in my trading, along with some education that will hopefully push you along that path of becoming a consistently profitable trader. In fact, at the very end of this video, I've got a rant about that very subject, about setting that goal of becoming consistently profitable and your starting point, and kind of the hiccups and struggles that many traders face when trying to get from point A to point B. So make sure you hang on to the very end of this video and don't miss it. It's a very good one. At least that's what my live room members told me. We're also going to address the subject of what I teased you about in the beginning, about how you in fact can go broke taking profits. But before we do that, I want to walk you through a trade. I wouldn't be doing justice to you guys if we didn't talk about some technical analysis. So I'm going to walk you through a trade I took this week on the dollar yen. I recorded it in about, I think, a 3 or 4 part series. And when we come back, we'll finish our discussion on the other topics I just mentioned. If we zoom out the chart a little bit, it's right at the top of this bearish or this bullish flag formation, this level of consolidation. If we pay attention to the previous move here on dollar yen, let's give ourselves some more real estate. Here we go. If we pay attention to our previous move here on dollar yen, price action had our initial starting point here. We had our swing low to swing high. We ran into a little bit of consolidation in this area before taking off, before retesting that area, and eventually creating new structure highs. So this is going to be a retest of previous structure as well, which you don't necessarily need in order to trade an advanced pattern formation. If you're someone that's going to be a trend continuation trader and say you're looking for a bigger move to the upside, then what you may want to do is you may want to take that stop loss and drag it just a little bit further down below our previous level of consolidation. Again, if price action is going to, if you can set up your risk reward, let's say something like this, where you're going to have a valid risk reward and you're able, based on your rules for risk management, you're able to take a bigger risk because you're shooting for a bigger target, I think it's worth having your stop underneath this level, because I wouldn't be surprised if this consolidation level was tested. I hope it's not, for my own personal purposes, but it would not surprise me if this level was tested. So the safest position, and again, if you're going to shoot for bigger targets, because now you have that, that no-brainer one-to-one, that much more than one-to-one risk reward, the safest place is going to be below this level. However, if you're just taking this as a Gartley formation, probably going to give you an inverse risk reward, which is something you don't want to have. But all right, traders, Akil here. It is Tuesday morning, about 6 o'clock a.m., and I just got long the dollar yen. This was a continuation off a trade I talked about last night in our syndicate program. If you remember in the syndicate, we had an advanced, I think it was an advanced Gartley formation sitting down there. And I actually goofed up. I forgot to get orders on. I was so concerned about getting that video up, and we've been having some issues with our servers, that I forgot to put my limit orders on to take that pattern formation. And I just did my analysis this morning and realized that, however, price action did come down into that consolidation zone that we talked about. If you remember, we talked about price action spiking up. We had a little bit of relief right here, a little bit of consolidation before the new structure high, the retest of structure, and the eventual new structure high again. And I mentioned that if you're going to look at taking this as more of a trend continuation trader and not just a pattern formation trader, then this would be the area that you want to have stops below. So we came down this morning. I took an entry at market about 104.33. We have a nice indecision candle there in the form of a doji. We've also got the RSI oversold. If you notice, we're down at we dipped down to about 13, which is well below my 20 oversold level. We'll see what happens. We'll see if we can involve ourselves in a trade. For our syndicate program, I'm just going to be looking for a move right back into previous structure. So move back up into about, let's see if we can get 106.55s. And then in my personal account, again, where I'm allowed to take multiple positions, multiple targets, I'm going to keep a few dollars on for a bullish extension. I've got to check the news this week. I know we have, I think, a Fed meeting coming out this week. We also have some yen news, so I'll check the dates on that just to prepare myself for any type of volatility. But I want to share with you guys that I'm involved in the trade, and we'll see how this thing goes. And hopefully I can track it all week if I remember to. So see you guys in the next video. All right, gang, it's about 9:45 New York time, Tuesday evening, that is. I'm actually about to get ready to head to bed, but I want to go over and check my charts. We did have some Aussie news come out tonight. And as we know, Aussie news in the Asia session tends to move the market pretty violently, and I do have a New Zealand dollar position on as well. But I want to give you guys a quick update while I'm here on the dollar yen trade that we've been talking about all week. You can see we're up quite a bit. The original entry was at, what, 104.33? Yep, about 104.36 was the original entry. We're sitting at about 105.17s right now, so about 80 pips up in profit. And this is where trade management comes in handy. This is a really big trade with massive profits. You can see my profit potential is all the way up here at our higher DSR zone, about 106.55. We've also got a very volatile week with the FOMC statement tomorrow, as well as some Bank of Japan monetary policy stuff coming out. I think Thursday evening, Friday morning. You never know with with the BOJ. But anyway, my main goal in trading is the conservation of capital. So I want to lock in profit whenever I can. So what I'm going to do here before I go to bed is I'm going to move these stops up, get them to break even, and this turns into a no risk trade, meaning that I've still got about another 140 pips of potential profit to be made. However, there's no way I can lose money on this trade, and that's the position that we want to be in as traders. Essentially, for you guys that are gamblers, go to casino, this is like playing with house money. So glad that we were able to do that, especially before the overnight session, especially before the FOMC statement tomorrow. And this turns into, once again, a no-risk trade, which means there's nothing to stress about. Yes, this thing could reverse and stop me out for break even, but remember, the number one rule of trading is don't go broke, is conservation of capital, and we've just done that. So I'll keep you guys updated as our trade goes on, win, lose, or draw, and I'll see you in the next video. All right, traders, good morning. It's about 5:30 a.m. Wednesday morning, and I apologize for my voice being a little raspy and a little grizzly, but I just woke up and checked my charts to a pleasant surprise. Typically, I don't start my technical analysis until a little bit later in my mornings. If you guys want a little bit more insight on my trading routine, check out the latest article I did for FX Trader magazine. It's called Trading Like a Business, 2 Steps to Increase Your Trading Productivity, and I outline my morning schedule. I'll throw a link underneath this video. But one of the first things that I do is I want to check any open positions just in case I need to manage them. And well, lo and behold, when checking my open position this morning, I saw that dollar yen had rallied up and actually hit first targets for a little bit over 200 pips. Now, I've been talking about this all week, and this has been a move that I expected. I thought we'd go later in the week instead of just completing in 2 days, but I'm not going to complain. We got it already. So we saw a lot of movement in a single direction here on the dollar yen over the last 2 days. Now, if there's one thing you notice, I don't think I mentioned this in last night's video. I did it right before going to bed, was I actually adjusted my targets. And before you yell at me, I know I did a video last week saying, don't adjust your targets, don't adjust your stops. Those are the 2 major mistakes that traders make. Because I know you guys are going to come out and do it. You always do. And I love you. I love that you hold me accountable. But I actually had a rule for adjusting my targets, and I'll tell you why. If you remember, I believe I had them at about, let me just check my notes. I believe I had my targets sitting at our DSR level right here, which was about 106.55, 106 or 106.54. Is there anything you notice, transformation members, we talk about this a lot, is there anything you notice that's a red flag about this level? Yep, exactly. It's sitting right above a psychological number. Again, psychological number, we call them even handled numbers. Those are numbers that end with 0, 0, or 5 zeros. There's a few more out there too, but those are the major ones. Numbers that end with 0, 0, numbers that end at 5, 0. Those are very powerful numbers in my opinion. And when I trade, I try to avoid them at all costs, meaning I try to get stops beyond them. I try to get targets before them. So what I did was I adjusted my targets last night right underneath that psychological number to about 106.47. You know, when you're looking for 200 plus pips of potential profit, sacrificing 8 pips isn't a big deal, especially when it's going to put you in a much safer position. And, well, I'm glad that I did, because I would have been a very upset customer if I didn't. And again, rules like that, guys, I just don't make those rules up out of nowhere. Typically, most of my trading rules, A, they were either taught to me when I did my trading education, or B, I learned them through the school of hard knocks, meaning that I took enough losses making a certain mistake that I decided to make a rule and adjust and adjust it. That way I wouldn't continue to do the same thing over and over again. So pretty cool trade. Again, 200 pips plus for the syndicate. Remember, guys, in our syndicate program, we do 1 in, 1 out. For my personal trading account, I am still looking a lot higher on here for some potential profit taking. Now, I'm going to be taking profits out at different levels, but the main goal, I think, is 111 even. Let me just bring down a daily chart for you. The ultimate stopping point is going to be 111 even, I believe, right up here. Yeah, right, 111 even, or I should say right below the 111 even handle. But there are a few areas in between that I'll be looking to take targets or unload parts of my position as well, like a retest of previous structure highs. We're going to have a 127 Fibonacci extension up here as well, which is going to be another level I'll pay attention to. Lo and behold, look at this, another psychological number, 109.50. All right, so I hope you guys enjoyed that trade. And as you can see, that was a structure and price action based trade. I often get labeled as the guy that only trades pattern formations because we present a lot of that to you during these videos, mainly because it's a very simple and less subjective way to trade that, at least in my experience, a lot of the clients I work with tend to flock to first. But I really enjoy these structure based trades, and all it really takes, you don't need fancy indicators, you don't need anything crazy like that, moving averages. All you need is the ability to read price action and understand a price chart. And if you feel like you're lacking in that area, here's what I want you to do. Head over to our website, www.tradeempower.com. While you're over there, check out all of the stuff we have on the homepage, everything from articles in FX Trader magazine to some 2618 strategies and the fundamental myth. But at the very top, click that Learn to Trade tab. And then when you click that tab, it's going to take you over to an excellent training called Into the Gray. You can see it talks about why markets move, how to apply OODA loop theory and IPDE. That's identify, predict, decide, execute to keep you one step ahead of the market. How to read a price chart using the new structure high, new structure low principles, and a lot more. And that will give you a good base knowledge onto what we're looking at each and every time we break down a price chart. So if you haven't done it already, go over there. Again, take advantage of all the free training we have here, but especially this Into the Gray training session. It's about 2.5 hours of greatness, and you don't want to miss it, especially if you're serious about improving as a trader. Now, as I mentioned, the dollar yen trade was a pretty decent trade, and we've been on a pretty decent streak here in the syndicate. If you guys remember, about 3-4 weeks ago, we took a big hit. All right, sorry about that, guys. I had to change screens. My other screen is a different size, and the picture got all messed up. But if you look in front of you, what you're seeing is our syndicate equity curve. And actually, two of them. The blue one is our equity curve from last year. The red one or the orange one is going to be the one from this year. And obviously this year you can see we're significantly below how we were last year. Same type of shape. We had a good start to the year, and then we kind of settled off in the summer slowdown, which is typical. Just the markets haven't been as kind to us, and that's really been the name of the game with a lot of traders out there. Not too concerned. We still have a long time left in the year. We still, again, my goal is to average 3% a month, so still on pace to do that. And of course, when you add some money management to it, you can always boost that return quite a bit. But this is no money management. Anyway, the point is, a few weeks ago, I had one of the worst trading weeks of my trading career. And you can see the big dip in the orange equity curve. And we talk a lot about persistence. We talk a lot about discipline, and especially for you guys that are in our syndicate program, what you notice the most is that no matter if we're having a good streak or a bad streak, we come in and we approach the markets exactly the same each and every day. And that's what trading is. It's letting those emotions stay to the side, not bringing them into the office with you. When you're on a hot stretch, you're not getting overconfident and over trading. When you're on a drawdown, you're not getting depressed and revenge trading. You're trying to stay cool, calm, and collect as much as we can throughout the year. And you see a few weeks ago, we had a big hit. We were expecting to go sideways throughout the summer, and we started going actually a little more down than we thought. But what did we do? We stuck with it. We continued to come in each and every day. We traded. And look what we've been able to achieve over the last few weeks. If I just, where's it at? If I update these numbers a little bit here, let's go. Boom, just watch the orange curve change. Boom. Oh, nope, not that much. Let's try that again. There we go. That's a little better. Boom. Boom. And then boom. You can see we essentially erased all those losses, and we're right back to very close to the equity highs that we achieved before the summer starts. So if we can continue this and honestly just go sideways and survive August, again, summer isn't the best time to trade, I'll be quite happy because we know things are bound to pick up once we get into the fall, once we get to September, October, November, before shutting down for the year. But again, this is consistency, guys. You want to come in, you want to do the same thing every day. When traders get into trouble, why traders get in trouble is because they make mistakes. And let me read you. I just got this on my phone from one of our videos, and we're going to talk about we're going to talk about the taking profits in a little bit. But I want to read you this. I literally got this right before I started recording the video. This is from Francisco. He says, man, there are so many facts in this video that I feel identified with. This is an older video that I did. It's true. Whenever I talk to my trading friends, I told them my trading plan for the future, I'm going to make my account grow for 4 years minimum, and then I'm going to live from it. They usually tell me 4 years, that is way too much. You can do it in a couple months. And that is not true at all. If you think about trading as a business, I've been involved in a couple of I've started a couple of businesses. The English is not the first language here. And we spend around 3 to 5 years before we can see a penny of real profit, talking about businesses in general. And I can relate to that, trust me. Most of the time, it was break even just to pay for the expenses. But consistent good management and love for the work slowly but steadily begins to grow. The key was always being consistent and always trying not to make a mistake, because a single mistake in one day could ruin the 1 week of work, even a month. Sadly, we learned that the hard way. If someone would have offered this information we learned in the hard way just by paying, and he has parentheses, investing, we could make it grow 3 times faster, even more. And that's the key. The key is not making mistakes, guys. The key is going through your drawdown, taking your punches, sticking with it, and not sabotaging yourself, trusting your plan. You've done your back testing on your plan. You've done all the hard work, right? You know that your plan has a positive expectancy. Your goal is simply not to mess it up. And one of the ways that traders mess it up is by taking profits too early. And here's kind of what I'm talking about. We'll give a quick example here on a blank chart. We often hear the statement that you can't go broke. You can't go broke taking profits. And this is not true. Not true at all, especially if you've seen the video that Charles did on the expectancy formula. So let's say we have a trader that's a 60% trader. I'd say that's pretty decent. You know, most professional traders that you see, they're going to be between 50 and 60. You have many like Peter Brandt's been successful, for the last 30 years, and he's about a 40% trader. But let's just say 60. That means you win more than you lose. And let's say you average. Why is this not working here? There we go. Let's say you average a better than 1-to-1 risk reward ratio. And again, this is all expectancy model stuff. So if you haven't seen that video that Charles did on the expectancy formula, make sure you go back and watch it. This will make a lot more sense. But let's say this is your average risk reward. So you can see it's about, stretch out a little bit more. Let's say it's about 1.5 to 1, right? It's about 1.5 to 1. So you've got a good risk reward. You've also got a strategy that wins 60% of the time. And that's a pretty good edge. Not only do you win more than you lose, but when you win more than what you lose when you lose. I know I probably butchered that, Jason Greystone. I stole that from his video, but essentially that's the ideal situation that you want to be in as a trader. And again, this is a little bit more than 2-to-1 or 1-to-1. Let's put it right there. So let's say we're a 60% trader. That means out of every 10 trades, we're going to win 6 times. We're going to lose 4 times. So let's take a look at this. Let's take our green box here and let's get our 6 wins. 1, 2, 3, 4, 5, and we need one more. Let's just put it up here, 6. So this is the profit made from our 6 wins. Let's look at our 4 losses. Take this box, 1, 2, 3, and let's go 1, 2, 3, 1, 2, 3, 4. I think we say that's pretty darn good, right? You have 6 wins. This is all your wins. And then you give a little bit back on your 4 losses. But in total, right, your overall profit looks like this. And we're going to put this to the side because I'll show you an example in a second of how you can sabotage yourself. So here's our total profit from situation number 1. Now, let's erase all this and start all over. Let's say a trader is making the mistake of taking profits early. And I talked to a trader. I had 2 different scenarios this week. It was great. We had one trader that was having struggles holding on to a position. They were in a position for, I think, over 6 days. It was teasing them, getting like 10 pips away from targets. And they were having a mental battle of wanting to get out early versus staying into it. And they ended up staying into it and they made target 1 profits, which is great. And they were excited. More importantly, it was overcoming a big mental barrier for them. We then had an example of another trader who was doing the exact opposite. He kept taking targets early. He was sending me tweets saying, "Hey, Akil, I just got out for 20 pips. Oh no, it went up to 40, which was my original target. I left half on." Or, "Hey, I was in that same trade as you on dollar yen. You took 200. I only took 50. Oh man, what's wrong with me?" Where he was sabotaging himself. Now, luckily, this trader at the very end actually stuck to a trade, and I was very, very proud of him. I was upset that he made the same mistake twice in the same week, but he finally took some action and changed that and ended up seeing those full position profits. But let's say you're a trader, right? This is your risk reward. And let's say you're a trader that struggles with emotions and you start taking profits halfway early. Now, before I get any deeper into this, I got a lot of comments last week about I made this statement. I think it's a mistake to take profits early. I'm not going to go back on that. I truly believe that, but understand this. If there's something in your plan that allows you to move stops, like we teach trailing stops and trade management here in the transformation course, that's different from moving your stop loss for no reason. Same thing with taking targets early. If for some reason you put a rule in your plan, say like moving a Fibonacci down and adjusting targets down, that's different from just taking targets early based on emotions. The target taking and the stop taking that I'm talking about are for you traders out there that get scared and nervous and fearful and do it just because. If there's a reason in your plan to do it, then that's perfectly fine because you've tested that and you've still proven to have a positive expectancy regardless. But let's say we have a trader here and they start taking their profits, right, halfway early, right? Instead of taking their 30 pips of profit, they take 15 on average, right? Now let's do the same thing, right? Their win percentage stays the same. And let's do the same thing we did with the first example. Here are our wins. 1, 2, 3, 4. Let's grab 2 more. 5, 6. Here are our losses, right? Because our losses stay the same. 1, 2, 3, 4. 1, 2, 3, 4. And let's take a look at the difference. You guys see the difference here? Same win percentage, right? 60%. One trader let their targets mature or hit the initial target level. Other trader consistently sabotage themselves. Look at the difference in profit. This is how traders get into trouble. Mental errors. And even if you didn't do it on every trade, even if you only did it on half of your trades, guess what? You still cut your profits in half, right? So every 10 trades, you're only bringing home half of what you're supposed to bring home. And in the bigger picture, your wins are not going to cover your losses. Your wins are not going to cover your drawdowns. And when you hit those big drawdowns, right? Like I just showed you on the equity curve, if I can find it, I'm not sure where I put it. When you hit those big drawdowns, like I showed you on the equity curve, right over here, right? You're not going to be able to recover from it. And you're slowly going to bleed your account. So I like the saying, right? You can't go, it's good to win, but you can most certainly go broke taking profits if you're not taking profits where you're supposed to be taking them at. And that is a very important lesson, a very important lesson. And take that from someone, you're looking at him. This is someone that used to do that all the time. I used to consistently take profits early. There was a point in my trading. I'm only about a 55% trader now. That's historically what I've been over the last, 4 or 5 years. There was a point in my time where I was a 65, nearly 70% trader, but losing money. And it's because I boosted my win percentage because I was winning more trades. But guess what I was doing? I was sabotaging myself, taking profits out early. And it was good when I was on a hot streak. But when I hit that drawdown, I didn't have enough stashed in the bank to make up for it. So, take that as a lesson learned. So anyway, more on this another time, I suppose. This video is getting kind of long, but make sure you stay tuned for the rant. We had a good discussion in today's live room about, again, just setting your goal as a trader and kind of the path you take to get there. It's about, maybe 5 or 10 minutes. I'll put it on at the end of this video. But do me a favor, guys. If you like what you saw, please hit that like button. Please hit that share button. That helps me massively. And if you're brand new, if this is your first time watching one of my videos, thank you for making it all the way to the end. You'd be surprised how many traders cut it off. I got a complaint last week. Akil, your video's 30 minutes. How do you expect me to watch the whole thing? Come on. You're going to tell me if you're serious about trading, you can't invest 30 minutes on a free video? If you can't invest 30 minutes of your time on a free video that's going to help you become a better trader, are you really serious about trading? I don't know. That's up there with the guy that said I can't do back testing because it doesn't give me time to play Xbox. So I do appreciate you guys staying with me. It does say a lot about your dedication level. And again, if you like what you see, hit that subscribe button. Don't miss my next video. And I challenge you to go back and watch at least 5 of my past videos, at least 10 of the past videos here on the Trade Empowered site. You're going to learn different things from myself, from Jason Stapleton, from Jason Greystone, and Charles. We all kind of follow the same philosophy, but we're certainly very different as traders. So I suggest that you watch all of our videos. So I appreciate it. Again, like, share, subscribe, leave me a comment. I love to hear what you guys think about the video each and every week. It gets me pumped up. It gets me excited. I'll throw the rant on during the ending credits, and I'll see you guys next week. Have a great trading week. Be safe out there and have a great weekend as well. Take care, gang. But we're just looking to take good trades, and good trades are ones where we follow our rules 100% of the time. People kill their accounts because they don't follow rules. I had it multiple times. Yeah, I agree. People kill their accounts. We'll take our break in a little bit, guys. People kill their accounts because they don't follow rules. More people kill their accounts because they don't even have rules. I would bet that more than half the traders out there trading don't even have a trading plan or rules for what they're taking. For me, that's like attempting to drive to a location that you've never been to before without a map, without a GPS. How are you supposed to get to your destination without a map, without directions? You're trying to go from being unprofitable to profitable, right? That's the main goal. Go from unprofitable to consistently profitable. And being consistently profitable is someplace you've never been before. You've never seen it. You've never tasted it. You've never smelt it. You have no idea what it looks like. As you hop in your car, which is your trading journey, in attempts of finding that destination of consistent profitability, how do you expect to get there if you don't have any directions? If you don't have a map, if you don't have a GPS, if you don't have someone riding shotgun that has been there before, how do you expect to get there? How do you know what highway to take? How do you know when to turn? Can someone answer that for me? Can anyone answer that for me? Your trading plan is your map. When you hop in that car that is your trading journey in hopes of reaching that destination of consistent profitability, your trading plan is that map that tells you exactly what you need to do to get there. Now, you still may get lost every once in a while. If you're like me in maps, I still get lost even when the GPS is on, right? You may get lost every once in a while, but you know what route you need to take to get there. You know exactly what you have to do. Now, the question is, are you going to follow it or not? Are you going to follow the map and allow it to take you to that place? Or are you going to deviate from it? And that's where a lot of traders get into trouble. But how can you expect to get there if you don't have a map, if you don't have direction? If someone can answer that question for me, I've got a rainbow and a pot of gold for them. And that's what gets most people in trouble. Most traders get into trouble because A, they don't have that map to begin with. B, they have a map and they don't use it. They deviate from it because they think they're smarter than it. I don't need no stinking GPS. I can get there myself. And sometimes they do get there, right? There are many traders that do get there. It just takes them a lot longer. Those who get there shortest, right? They have a map and they've got someone riding shotgun. Someone riding shotgun that's been there before, that's been to that destination. And I think that's the fastest way to get there. Not only can they give you directions and say, hey, you need to do this, you need to do that. That's how you get to this final destination of being consistently profitable. But they can give you more guidance. They can tell you, hey, you may want to avoid this road, right? There's a herd of buffaloes that like to camp out in the middle of the street and you may get delayed by a few days. Hey, you may want to take this path right here. That way you save more gas. You don't have to stop and fill up. Those people get there the quickest because you have someone next to you that has done that journey before and can give you insight, can give you pointers, can give you tips and help you get there in the way that is least destructive to yourself. Sorry for the rant. Let's play some music and take a break.